Hey, everybody, it's Mark Yagi. Welcome back to a weekly stock market update. And if you're in this market at all right now, if you're in this crazy market, you know what I'm talking about. It's been rough. And I sure wish you that you're in cash, but if you're not, that's okay. There's light at the end of the tunnel. Nonetheless, I got to be honest with you, this is a tough market. So let me share some slides with you. I'm not going to go on too long because you've probably got other stuff to worry about, like your stocks. But let's talk about them. Just got off a really great mastermind call where we talked about Apple and Tesla, and let's start with the elephant in the room, and that is that job growth was only 114,000 in July. Now, a little bit of conspiracy here, but the Fed knows this is coming. They've engineered for this. They've raised rates and curtailed growth in the world, and in not the world, but in the U.S. And because of that, they've wanted unemployment to start to go up, job growth to start to go down. They've wanted this. And so the market's freaking out about this. And I'll tell you why it's really doing it in just a second. But they're saying this is recessionary. Well, the Fed wanted a recession so they could lower rates, so they could make the assets go up going into the stock market. They're just doing it a little bit too late. And now they're going to have to probably do a 50 basis point raise when they do raise. And they may do an emergency raise here in the next couple of weeks coming into the election. We'll see. Right now, everybody thinks it's September. Maybe it's going to be a little earlier. They're behind the eight ball on this thing. But that's what's going on with the market. Let me show you what that means. This has been crazy. We are, first of all, in a red market. All right, sorry. We're in a yellow market. We were green, and then all of a sudden we had these 2 days of selling, which has just been absolutely horrible and took us right out of green and into a yellow condition. So you got to exercise caution in the yellow condition. And that is a horrible candle right there that I'm showing you. That candle right there, that is nothing to mess around with. So be careful, please. Now, when we do talk about the NASDAQ, you're seeing for the last 2 weeks, it's been below the 50-day moving average, this moving average right here. You could see that it had a gap down. You could see it had another gap down today. You could see it's going down and testing this 16,445 swing point. Now, if it does it on volume, huge volume, it's going to keep going lower and it'll probably go down to below 16,000 and test that 200-day moving average. But if it does it on less than 66.7 million, and I'm not sure if it will, it's looking close. If it's doing any less than that, there's a good chance that we get a bounce here. Now, do we get a bounce on Monday? I don't know. Maybe Tuesday. I don't know. I'm not Nostradamus. I'm just saying this is a probabilities game, and everybody's freaking out. And, the guys that are in New York drinking martinis are going, hey, why don't we let everybody freak out and then we'll run the market back up? That's what they usually do. So that's what I see possibly happening. That swing point is in play, and it's in play today. And if we have high volume going into that swing point, well, we're probably headed a lot lower. That's the way I read it. The S&P 500 looks very similar to very similar. We got a couple of gap downs, but we're a long way-ish from that 518.36 swing point. Now, you get confluence in the market. So if the NASDAQ goes down and hits that, it may drag the S&P 500 down to hit it, and then the two together may rebound, or the two together may take us lower. Who knows? But anyway, this is a test of the 50-day moving average. When you look at the Dow, has been performing incredibly well over the last few weeks, and now with these last two candles with high energy, it's now testing the 50-day moving average. Still more healthy than the other two. And the same thing with the New York Stock Exchange. Still not as good as the Dow, but better than the other two. It's pretty close to its 50-day moving average, and it's way above its 200-day moving average. So to me, this isn't as bad as it feels. If you're in some of these tech stocks, like, Apple has gone down 20%, NVDA has gone down almost 40%. CrowdStrike is just a freaking train wreck, as I've been talking about on my videos. If you've been watching the YouTube channel or you subscribe to my newsletter, it's been just a train wreck. And it will continue lower. Maybe I'll show you that slide before we get out of here today. But look at the VIX. The VIX is the volatility index. That blue candle shows that there's gigantic amount of panic in the market. We've been kind of cruising around here 11, 12, 13, and all of a sudden the last 2 weeks, this thing has gone crazy. And then on the other side, you're seeing yields come down. This is why the Fed has to lower rates, is because, that's what the market's telling you. Like, things are slowing down in the market, so the yields are coming down. And the Fed's going to be behind the eight ball even more. So they've got to follow the market and catch up to the market by lowering rates, the Fed funds rates. Now, here's the real reason everything's selling off. You're not going to hear this in a lot of places, but if you've looked at the Nikkei Japan moving average, or the Japan stock market average, last night it was down like 6%. 5%, 6%, somewhere in that range. This is the chart. And you can see that chart has been doing okay, you know, by and large for this year, but this last month has been just horrible. And it's falling off a cliff here at the end. Why? Well, for 30 years, the trade on the Japanese yen or the currency has been a 0% return, right? So what people have been doing is borrowing at 0% and going and investing in other places in the world, things with high assets, things like Bitcoin, things like our stock market in the US. All around the world, they're finding these little nooks and crannies where they can make asymmetric returns compared to a zero. It doesn't cost you anything to rent the money, right? So you rent the money, you take it and invest it someplace else, you make your money, and you take it off the table before the music stops. The music is stopping. And so they're starting to sell a lot of US equities. They're starting to sell assets around the world. You're seeing Bitcoin drop for that and a couple of other reasons. You're seeing a lot of assets dropping. Real estate happens to be taking it right now as a big drop. So you've got to start looking at what's going on. And you can't just say it's the US and it's our job market. That wasn't that bad a job report, and we kind of expected it. Okay, let's go through a couple of stocks. Let's go through Apple. Apple beat numbers-ish yesterday, kind of on the sales and maybe not so much on earnings or something like that. Anyway, it wasn't a bad report, and the stock is up like $6, $5 right now. Healthy, above the 50-day moving average. To me, nothing to worry about in Apple. NVIDIA, also, it's not as bad as it feels. If you bought it at 140, you know, through the euphoria, you're probably not loving the fact that it's at 105 right now. But if you bought it any other time, it's not as bad as it is right now. This is still a 98% relative strength rating. There is a gap on this chart at 93 that it may want to fill. So I don't know about NVIDIA, but I would probably set up a buy range somewhere down near the 93s. I don't think I'd be chasing it on the way down, although this down is not as bad as some of the other downs, which maybe I'll get some time to show you here. Amazon, really bad, right? So Amazon's a down. They, went below the 50-day moving average on volume yesterday. They're down below the 200-day moving average on volume today. They want to take this gap out here at 159, and there's a good chance that it does that. And there's a gap that got filled right here today. So a lot of stuff is resolving with Amazon. Still, I wouldn't want to try to catch this falling knife. I think it certainly wants to test that 159 level, and it may even want to go to 144. Just be careful if you think Amazon's the greatest company in the world. Tesla, same kind of things. Testing its 50-day moving average, got a golden cross a few days ago. This is a test on pretty low volume, which is usually bullish, and you may get a bounce out of it. Again, I wouldn't be buying any of this stuff until you get some confirmation that things are going up the other side. Microsoft down to its 200-day moving average on volume. This is a tough downtrend to get involved with right now. Let me just fast forward here to some of the bad stuff, okay? And this is why you have to respect these really lousy markets, guys. Look at Intel, right? Intel's down 20% or 30% this morning on a bad earnings report, some restructuring, some firing, some whatevers they're doing. And, you're getting a huge down, huge volume here, 1,000% volume. That's telling you that the big money is getting out. They don't believe in it. When the big money is getting out, they don't get out in one day. It's going to take a while to get out. So you're going to possibly see, and I'll bet you'll see, now that we've broken this 2973 level, you're going to see stuff around 2015 maybe coming up with Intel. Such a shame for such a great company for so many years. Too bad. But Snapchat, same kind of thing, down a huge amount on the last 2 days of trading, missed numbers, blah, 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 down below $10. This thing was down below $10 a couple of years ago, and now it's back there. And then CrowdStrike, which if you've watched any of my videos online or in my my subscription newsletter, which is free, by the way, right now. CrowdStrike, look at this thing. This has fallen off a cliff. Remember a couple of weeks ago, I told you that, the airlines were down because CrowdStrike had this glitch or they were doing some software update. There's more to this story than we're ever going to know. But this, to go from $400 to now approaching $200 in 2 weeks, it's really scary. And I've seen this happen with stocks where you get a gap down, a gap down, a gap down, a gap down, a lot of energy on the gap downs. Look at the volume on the selling. The big money is selling. The lawsuits are coming with all the outages they caused because of their little software update. The story has not been finalized and written yet. There's a lot more to come to this story, but please be careful if you're in CrowdStrike. Do not try to catch this falling knife. This stock looks like it may have 166 into it and maybe even lower. So just wanted to kind of be the bearer of bad news maybe sometimes you just got to get a slap in the face to say, hey, listen, it's not all hunky dory, but there's always a green market coming around the corner. So hopefully you'll be in cash, or you'll be really positioned so that when it does come, you'll be ready for it. Listen, thanks for joining me. Subscribe and like this channel if you're on YouTube. If you're on a different platform, please give me a follow. And if you haven't subscribed to my newsletter, I think there's going to be a description in the link. It's called Insider Tips. We do these kinds of updates every week in it, plus emergency stock updates and all kinds of reports to keep you in touch with the market. So